Is something sinister hiding in the Bitcoin chart? A CEO returns to the forefront. And what stocks am I interested in that we've been neglecting for a little while, that have remained forgotten for a bit here? We're going to take a look at all of those things in today's episode of Trade Cave. So stick around to the end to make sure you get all of that information. But before we get going, check out Capital Curiosities. They do a lot of fiscal histories, fiscal business histories. Lots of stories have happened in that space over the years. Lots of crazy things, and they're talking about all of them. If you're tired with the news cycle and you want to just kind of relax and listen to something entertaining, you've got Capital Curiosities there. Maybe if enough of you go over there and watch, they'll let me do a guest narration. Let's see. I'm kind of hoping. Let's see what happens there. Anyways, let's go ahead and take a look at Bitcoin. So Bitcoin, this is what scares me about Bitcoin. All right, so let me turn off all of my drawings real quick so you can just see this chart here. Pure chart, right? We got this nice angle going up. I'll turn on the drawings for 1 second. You can see this aggressive up channel that we are in right now. We are very, very, very close to all-time highs. All-time highs are right here at this white line here at $109,000. We went up to 107 last night. Now, all that's good and great, but what's scaring me? What is concerning me here? What's concerning me here, and you can see the bottom of the screen there moving, is the RSI. Now, we've got this peak back here, right? Now, this bearish divergence may have already played out here, because you could see that back here, it only went up to 70 when price went higher, and we had that bearish divergence, and then we got that bleed off down here. But we are seeing a lower RSI, and we will see a higher price soon. So unless RSI gets up into the 80s here, there is a potential for that divergence. And we're also seeing it right here, right now, where, let me turn on the drawing tool right there. In this little section right here, we have a higher high, and on RSI, we have a lower high. So we got that same bearish divergence. I just drew it there for you. We got that same bearish divergence that we saw back here. Let me do that a little better. The same bearish divergence that we saw back here, we're seeing play out right now, right here. So if that plays out and we get that bearish divergence and it plays out, we could see it fall all the way back down to about 90K, which would be the 200-day moving average. The last time that this happened, we came down, we hit the 200-day moving average, which right now it's at about $88,000. By the time it got there, it'd be about $91,000. Okay, get rid of some of those drawings. All right, how do we know when that's going to happen? If that happens, we will know because this line will break. This channel will break. When this channel breaks, we're likely going to come back down and hit the 200 EMA there. Now, is that guaranteed? No. No, it's not guaranteed. It can keep charging up like this for a long time. And that 200-day EMA can find its way all the way up to $100,000 before this thing rolls over and comes to it. So I wouldn't sell today, but I would watch the 21 EMA, this blue line right here, which is at 101,000 and $665. So $101,665. Watch that line. That line breaks. We get a closure beneath it and a candle opening completely beneath it. Well, then potentially we're coming back all the way down to the 200 EMA. That would be my line in the sand that I'm watching for Bitcoin if it is going to roll over here, or at least not necessarily fully roll over, but gives a pullback. If it's going to give us a pullback, we'll see that occur. Okay. What else is going on? So that's the sinister thing hiding in the Bitcoin chart. Potentially some bearish RSI divergence. Let's go to the weekly real quick, see how that's looking. Yeah, that's also a concern. On the weekly, you can see we're getting, so we had bearish divergence right here, right? And we're also looking like we're ready to make a higher high, but the RSI on the weekly is significantly lower, even than the last time we got that peak back here in January. So there will be bearish divergence. This could look like a double top where we'd have top, top, and then we might come back down and test the neckline of the double top, which would be around $80,000. And that would be very uncomfortable for everyone, I think, if that were to happen. So again, that's not happening yet. It's not happening yet, but we are watching carefully that 21 EMA on the daily chart to make sure that we are not going there. Okay. So we're watching that. That's the big scary thing. What's not so scary? We've got a CEO returning. The return. Elon says He's back focusing on Tesla. He yesterday announced that Tesla is on track to launch robo-taxi trials in Austin in June. And if that goes well, you better believe that this stock right here, that this is going to look like a bull flag here. This little thing right here will be a bull flag taking us into the 400s if that's how this plays out, right? That does well. So what are we watching? I've got a line right about right here, and I'll draw it on the chart. We'll do horizontal line, and in fact, I want it to be just ever so slightly higher. Ever so slightly higher. I was too zoomed out. Couldn't do it well. Put it about right there. 355.70. Lock it down. Put an alert. Let's make that message. We're going to say flag breakout. Okay. And I'm going to go to the settings, and I'm going to change that to once per bar close, and we're going to go crossing up. Okay. Leave that there. And when this breaks, yeah, we could find ourselves into like we can find ourselves deep into this resistance here, maybe even all the way up to 450 from there. And if we do the technicals, let's draw the technicals for this bull flag. If we draw it, takes us to about 439, which is perfectly to this peak of this candle right there. Look at that. Perfection. So that is our target. So I'm going to go ahead and I will draw this here and do this, and I'll do an alert and right click on that, edit it, go to messages, and this will be my take profit, which would be TP. All right. Boom. So it'll just get an alert and it'll tell me that's time to get out. And then I'll probably do another one at some point around like 4:15, telling me to, pay attention. I'll do it right now. I'll do it right now. Go like that, Tesla, do the alert, and then I go to edit, message, and here I'm just going to type caution. Caution, pay attention. Okay, open your eyes. Now, how do we know if this is undone? We know it's undone if it goes underneath 333 and closes candles beneath 333. I've got an alert right here. Potentially it could come down here and bounce, so I'm watching that. We do have an inverted head and shoulders. That played out already. So we got the inverted head and shoulders right here. Now we got a bull flag right here, which is giving us that bullish continuation pattern right there. And if that breaks out, we could find ourselves at 439 very, very quickly in June. So watch Tesla closely here. Watch Tesla closely here. The other thing we're looking at here is the 3 angles of attack. All right, so we've got angle 1 here, angle 2 here, and we could come back, tap this potentially, right, around 327, and then find angle 3. That would just go absolutely parabolic. Let me stop making rays everywhere. Okay, so that's what I'm looking at here, right? We had angle 1. We're currently on angle 2. This could maybe be perceived as angle 3, but I'm not so sure yet. I think we might come back, go sideways a little bit, touch angle 2 one more time, maybe even if it's just a flash on bad news of some sort, and then angle 3, find angle 3 all the way up to 439. So we're watching that. As soon as I get confirmation above this line here at 355.70, or we hit line 2 again and start blasting off from there, then I'd be looking at Tesla again to go hard. And if you don't have the capital to be buying Tesla or selling puts on Tesla or whatever it is that you want to do with Tesla, you got TSLL. That's a 2X fund. That's $14. You got TSLG. That one is, let's go here, Tesla G. That one is $7.39. This is also a 2X Tesla. And that right now it's $7.39. It would go up to, well, let's calculate this properly because it's not going to go the exact same amount. We got to go see let's see, we've got here. It would be a 28% move. So we'd be looking at a 46% move to the upside on TSLG and TSLL. So we'll go to TSLG. If all you've got is $7, and you can come down here. It'd be a 46, about right there. You'd be looking at a move up to about $11 on TSLG from where it currently is if we get that move. All right. So that's what we're looking at there. So those are the two things. Now let's look at some stocks that I haven't talked about before. UNH, United Health Group. This one's very interesting. It's down a lot this morning. That sucks, but that could be good for you. I am in this one. I bought down here on Friday, May 25th, and it kind of went up. I'm nice and up on that. I added one yesterday. I had one share yesterday when it was clear I was going to get that close above my line here, but then it dropped dramatically in pre-market. But there's a reason I'm buying this. Okay, so this is the one where the CEO was assassinated. Yes, this is that company, and then they lost the second CEO because they quit, and then now they are getting some regulatory scrutiny. The DOJ is looking into them about potential fraud on Medicare. Okay, but we've got a new CEO that bought $25 million of shares with their own money. We've got more members of the executive suite buying shares of this thing. Members of Congress are buying long-dated call options on this thing. I am interested. It is down dramatically. It is a defensive stock, a staple defensive. It is currently down 50% off the highs, almost nearly 50% off the highs. All I really want to see is a gap fill right here to 379, and I'll be making tons of money off of my position. So that's UNH. Okay, UNH. I like the look of it. The other one that's got me very interested is Pepsi. Good old consumer staple. Good old consumer staple. Pepsi. Pepsi is down dramatically. Let me go over here. Let me show you their competitor, their compatriot in the fizzy drinks industry, Coca-Cola. Look, they were down similarly like this a while ago, right? They were down in a similar fashion, just down for a while there back in January, and then in February they popped up and they stayed up for a while, right? Could that be incoming for Pepsi? Remember, Pepsi has a lot more products than Coke. They've got all the snacks. They got drinks and snacks, whereas Coke mostly just has drinks. Even if all we do is come back and tap this line up here, that is a move up to $170, which if this trade that I've got on the chart here works out, that is an 8-to-5 risk to reward ratio. So I'm watching that very, very, very closely. I'm actually already in this one. As soon as I got this big green up thrust candle here, I got in, and now we're seeing that it is making a flag, and all it needs to do with that flag is move up and get above, please. Just get above 135, and we are in business, and I'll be adding to that position there. Okay, so we're looking at that for Pepsi, and we're looking at to do something similar. So I'm looking at some of these old legacy names, right? Same with like Target. I like Target too, to a certain extent. It's beaten down, but Target needs to get above the 50-day moving average, which is up here, right? About 101. I'd prefer to see it over 107.25 before I'm interested in Target, and that is largely because of this formation here. That's a bear flag. It's not the bottom of the range, but that's a bear flag. So it needs to negate that bear flag. The reason I'm interested in Pepsi over Target and why I bought Pepsi over Target is because, let's go, this little formation down here, that's not a bear flag. That's a descending channel. Descending channels tend to break to the upside. So that's why I was much, much more interested in Pepsi. Let's see, like GM was another one. GM broke out, or is working on breaking out. We got a flag right here that flag could potentially take them as high as maybe $56. So that would be like, another 12-13% move up on them. And then one last thing. Yesterday, metals broke out. Metals broke out yesterday. Look at that. Gold had a breakout yesterday, and it looks like it's going to get continuation. Look at that. Continuation. So we're going to run back to the highs of gold. Maybe you get a triple top. I don't know. We'll see. Silver. Here, I have it on this chart. Nope, it's not that. SLV. Silver had a breakout, and look at that. It looks like those candles want to stack, so silver could be continuing to go higher. And then also platinum. And it was is it PPLT? Yeah, platinum shares. Ooh, look at platinum. Platinum is ready to roll. In fact, I think I'm going to buy some platinum today off of this. And of course, nothing I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. Always do your own research, come to your own conclusions, be responsible for your own risk. Anyways, with that said, please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.